We are seeing Bitcoin rebound from its lows for the year, climbing back above that $30,000 handle. The cryptocurrency turned negative on the year yesterday on the back of some new headlines out of China, with the PBOC summoning banks and payment services to close any loopholes on crypto trading. We also had the government over in the Sichuan province shutting down mining there. Our next guest says a crackdown in China is good news for the U.S. Let's bring in Peter Smith, Blockchain.com's co-founder and CEO. Peter, you've highlighted, or we've been talking about a lot about how the crackdown has been ongoing in China, but with the mining aspect now really front and center, to what extent do you think that that's going to propel more and more miners to come to the U.S.? We've already seen the movement start. How much of that comes over here?
Yeah, I think it's actually fantastic news for the Bitcoin ecosystem. You're going to see a diversification of mining operations around the world. We've been seeing that trend over the last 2 years as large mines are built in Europe, the US, a variety of other geographic locations. But that trend's going to accelerate hard now. And I think one of the things that concerned me the most about the crypto market was the concentration of Bitcoin mining in mainland China. And so I think this is going to be painful in the short term as Chinese mining firms sell down a lot of their inventory of Bitcoin and move their operations overseas. But I think from a net perspective over the next 3 or 4 years, this is actually hugely positive for the Bitcoin ecosystem.
Yeah, and the other thing too, Peter, I guess it also maybe to a lesser extent addresses some of the sustainability concerns too out of China. There was that crackdown earlier in Inner Mongolia that was mostly coal-powered miners. Sichuan was more hydropower, so maybe to a less extent really helps on the sustainability front. But when it comes to that being an issue among institutional clients, I know you guys are also an investor in Amber Group, who we had on yesterday. It does still seem like institutions, in terms of what he was telling us, are interested in hopping in at these levels. Have you seen any material difference in the excitement among institutions?
No, I haven't actually. I think you'll see, it'd be a struggle for sort of some of the large asset managers like BlackRock to allocate until the ESG issue is figured out. But I also think that's going to happen. Like, you're going to see mining companies start to disclose where they're getting their energy. And for the most part, Bitcoin mines are powered in places where there's really low energy cost. And that only really comes where the energy is mostly hydro, to be honest, or new novel things like, flare operations in the US. So I actually think that a lot of this is just a lack of data. We're one of the largest financiers of Bitcoin mines out of our institutional credit business. And the vast, vast majority of Bitcoin mining operations being built today are being built on top of clean power.
How are we likely to get those disclosures? Are you thinking sort of a regulation that could potentially call for forced disclosures of the way in which these mining companies operate? Is it more of something that's voluntary that you think will be enough to correct some of the prices or declines that we've seen on the back of these ESG concerns?
I don't think the price declines are on the back of the ESG concerns. I think they're on, a leverage washout on the momentum reversal, as well as like the broader crackdown in China on the cryptocurrency market. The ESG problem, though, is one that you need to solve over the next 5 years as you start to bring bigger and bigger funds into the space, like your BlackRocks and Blackstones of the world. So I don't think it was like institutions selling because they suddenly realized that, there's ESG concerns. I think it just kind of caps what institutions can come into the space until that's solved. And it is, like I said, a data transparency issue, not an underlying kind of facts of the case issue. And as an industry, we've got to work together and figure out how to make that data transparent to the rest of the participants in the ecosystem.
Outside of Bitcoin, though, you guys have also been working on some interesting things, including the integration of BitClout. For those that don't know, social media kind of styled application that's decentralized and offers their own token there to kind of power the network. One of the critiques, though, is that there wasn't a lot of places to trade clout. Now you guys added them exclusively as kind of the first starting point. Talk to me about how that came together and what the expectations are around that particular project.
One of the things that we believe in at blockchain.com is working to empower humans and increase human freedom around the world. And today, way too much of our public discourse is controlled by private companies, by Twitter, by Facebook, and their competitors all around the world. BitClout's a really novel attempt to build a decentralized social network that's censorship resistant. And that's really beautiful for humans around the world because it means that your government can't tell you that you have to stop talking. And in a lot of countries, that's a nice to have. Like in the US, we have pretty good rules about this. But there's a lot of countries around the world where governments use this power in a really negative way. And I think it's super important for the world that there's a public space and a public forum for people to express their views freely online. And so, our decision to list BitClout and provide a marketplace for people to trade clout was really in support of that vision and of the ecosystem, over the next 5 to 10 years as it really grows and develops.
Were there more unique security concerns around clout? I mean, people have pointed out, the project's similarity to Twitter. It's obviously something that's a real project that you'd kind of be supporting by putting it on to blockchain.com and allowing people to trade. But we've talked before about kind of walking through those different concerns each time any one of these entities adds an asset to the platform. I mean, what did that maybe look like specifically when it came to this one versus other things that are added in the past?
It's a really complicated and nuanced legal analysis each time that you have a novel asset. Cloud is the governance token of a decentralized social network. It's not part of a revenue stream. And so, our legal team and outside counsel were able to get pretty comfortable with it. But, at the end of the day, like, I'm pretty far from those exact details. I'm really focused on the product, less on the legal side, as you can probably guess.
Blockchain.com co-founder and CEO Peter Smith, good to talk to you. Appreciate you joining us today.